This week, we're talking trade and domestic demand. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets. It's University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, Scott, so we're going to recap monthly trade data. We'll look at the jobs report. We'll talk restaurant performance index. But before we get into all those things, let's recap what happened this week in the markets.
Yeah, this week in cattle, those live fed cattle were about $2.40 higher. The feeder cattle markets this week were anywhere from $3 to $6 lower. On the future side, June live cattle futures contract was down $1.80, and the August feeder cattle contract was down $5.35. We also lost on the choice box beef price this week again, down about $2.10. On the hog side, cash barrels and gilts virtually unchanged this week. The June lean hog futures contract was down $3.45, and the pork cutout value gained 15 cents, but not a big change there as well.
We've continued to see kind of this up and down, back and forth in terms of the markets. We gained some prices or gained some a little bit in cattle prices last week. We lost this week. Are we kind of gearing up for what could be just an up and down yo-yo type string of weeks together as we go in the next couple of months?
So perhaps. I think as we sit here in early May, we're really getting to the big part of grilling season. So I want to see what happens the next couple of weeks. That may give us some strength in some of these prices as we look in the short term. However, I think maybe more sideways here, and you know, cattle have been up and down, but I will just say we're still at historically high levels generally, and I think hogs have kind of turned off sideways as well after what's been stronger growth in those prices earlier this year. So we'll see what happens for the remainder of the year. I still keep saying I'm not sure we're done with record cattle prices, but we'll have to wait and see given where we sit today.
All right, let's take a look at slaughter numbers. Speaking of what's happening week to week, as we take a look at cattle and hog slaughter, how are those stacking up to last week and year ago levels?
Yeah, if we started on the cattle side, USDA tells us for the week ending May 4th, a run of 619,000 head of cattle. That's up 6,000 head from what we did last week, but down 2,000 head from what we did last year. On the hog side, a run of 2.406 million head of hogs this week. That is 27,000 head more than last week, but 46,000 head below what we did a year ago.
And as we take a look at the year-to-date cattle and hog slaughter, how is that stacking up?
Yeah, so we look at cattle slaughter first, down 4.5% year-to-date, and we're seeing hog slaughter that's up 0.5% year-to-date.
All right, monthly trade data, probably the biggest report for us this week. As you take a look at what's going on in terms of exports for beef and pork, the trend that we've been seeing on the beef side has not changed this month, and my guess is it's probably not going to change anytime soon.
Yeah, I don't think we're going to see any changes anytime soon, and that has a lot to do with just how high our prices are here in the U.S. And how high our export prices are for consumers in other countries. You look at the March 24 data, 256.1 million pounds of beef exported out of the United States. That's down 10.4% relative to what we did a year ago. And when we start looking at what's happened in the first quarter of 2024, so we're down 46.3 million pounds of beef exports, but that's nearly 6% below where we were the first quarter of 2023. You and I have talked about imports a lot already on the beef side. Another month of increased beef imports, up 32.5 million pounds. You look at that first quarter and we're up 25% in beef imports. The good news continues to be what's happening on the pork side of the equation. So 621.1 million pounds of pork exported March of 2024. That's 2.1% above what we did a year ago. And when you look at year to date, we're up 8% in terms of pork exports. I think that's been part of the driver for some higher pork prices than we might have anticipated earlier. I will say, when you look at the results here, the one that jumps out at me, Mexico, we've talked long and hard about how good it's been for Mexico to increase trade with us. They were actually down 28 million pounds in March, yet in total we were still up because we had South Korea come in being up 27.4 million pounds March of this year relative to a year ago. And it's a lot of those other countries that still continue to show a lot of increase and a lot of promise.
I want to talk again about this beef import number. We have talked a lot about it. I think we need to keep talking about it because the conversation I hear so often, or the question I hear, is why are we importing beef from other countries? When we look at that mix, what are we bringing in? Why does this matter to what we do in terms of consumer demand and being able to meet that as well?
Yeah, so we're really bringing in a lot of lean beef into the U.S. right now. Just to put that 25% in perspective, it's about 240 million pounds of additional beef that's been imported in the U.S. If you think about how strong ground beef prices have been, and I caution us that I think they could get stronger, especially if we continue to talk about beef cow slaughter that runs below year-ago levels. It only tightens up some of that ground beef market, I think, a little bit more. So it's an opportunity to bring lean beef in to go with what's maybe excess fat. When you look at what we've been doing in terms of slaughter weights for fed cattle, I have a hunch that we need some lean beef to go with the additional fat we're getting out of those carcasses. So it is a balancing act. I'm not saying whether it's good or bad, but there's multiple facets that we need to consider when we think about those beef imports.
Looking at that diversification of markets, I'm going to jump over to the pork side of things. You brought that up, and we talked about that before. When we look at finding these other markets, and they're not all going to be a China, they're not all going to be a Mexico or a South Korea, how important or integral are those like mid-size and maybe small, medium-size markets for us to consistently grow demand long-term?
Yeah, for me, this is all a lot of discussion about risk management. So the ability not to have a few Chinas, but a lot of countries importing pork from us gives us a good opportunity, if one of them backs away from the table, not to see a massive change in demand. So I think that's where some of these Central American countries that we picked up, they're typically small markets, but growing markets. I think that's the win here. It does take a lot of effort to get those started. I think once you start trade with some of those countries, it probably hangs with us longer term. So maybe a more consistent export opportunity in total as a result of diversifying in a number of countries. It is hard to find other large countries, other large importing countries, if you will. So we're going to have to work on some of these mid-sized to smaller countries that want to take product from us to grow total exports.
All right, let's talk domestic demand. I mean, demand is kind of the key to what we're talking about this week. We're going to focus more on the U.S. side of things now. Jobs report for April, weaker than expected, and this is probably the first really, I don't want to say negative, but like disappointing jobs report in recent months.
Yeah. So we added 175,000 jobs, according to BLS this morning. That was less than the pre-report midpoint of 240,000. I find it interesting that the stock market decides that's all good news. And again, the spin here is maybe it slows or cools inflation when we show kind of some of these smaller job growth numbers. Yet for us in the meat side of the equation, fewer jobs might mean weaker domestic demand. or not as strong as of domestic demand for things like beef and pork. And I think that's the thing we have to weigh. You look at the unemployment rate, it ticked up 0.1% to 3.9%. I think we slowed a little bit wage growth. It was in that 4.1, now backing off to 3.9% growth over the last 12 months. Just reminding me maybe we're slowing a little bit on that side as well.
Is that wage component is equally as important as maybe some of those other ones when we think about things in terms of consumption and dollars that can be used in the grocery store or to purchase meats and those types of products?
Yeah, so absolutely. And I think this is the kind of in between here that we have to think through of when wages are increasing in that 4+%. It's easy for demand to grow for things, easy for us to talk about inflation being stronger than we think. Those wages cool a little bit, at least the growth in those wages cool a little bit. That certainly, I think, makes consumers think twice about consumer spending. Again, for us in the meat side, I think we see a lot more stories now about restaurants slowing, not to get to restaurant performance index too quickly, and maybe more consumption at home because prices for meat at the grocery store haven't been going up maybe as much as that away from home side has. Those are some interesting things in terms of then what mix do consumers buy if they're going to go back to more at home consumption, trying to curb food spending.
All right, let's jump into that restaurant performance index. Is there a part of that that's maybe more concerning for you than another?
Yeah, so I think we have to understand that. So the restaurant performance index has both the current situation, a piece of that index, as well as an expectations. Several months ago, and you and I would have been talking about the current situation not as strong, and it was all expectations driven. When you look at the current situation for March of 2024, came in at 98.2. Now let's understand that 100 is no change. Above 100 is growth. Below 100 is contraction. So 98.2. When we look at the first 3 months of this year, 96.6 in January, 98.3 in February, 98.2 in March, it just tells us same store sales, customer traffic, all those things are down. And maybe that's the concerning part, even though when you look at the overall index, we did go up 0.2% in March relative to February. But again, driven more by the expectation side than the current situation.
It'll be interesting to compare that to what we see next week in consumer sentiment.
That's correct. When you look at these overall markets, I think we're ebb and flow with kind of the current situation, and this idea that perhaps the Fed isn't going to raise interest rates and held them steady this week might give us some boost as well in some consumer confidence.
Scott, supply and demand along with consumer sentiment are out next week. As you take a look at the supply and demand numbers, what are you watching for from USDA?
So I think the big side is just to see if we get any more production adjustment trying to happen in beef and or pork for that matter. I think those are the big issues as we kind of look at that report. Curious to see if USDA trims their cattle prices lower, given some of the things that have happened over the last few weeks. But to me, those are the big ones. And of course, on the crop side, we really don't see any big, I don't expect any big feed cost changes. And we're probably at this point waiting for June acreage before we're going to see much move one way or the other.
With the consumer sentiment as well, is there a possibility to see or maybe not see an impact from the the elements that we've been talking about in terms of the influenza A into the dairy sector, and then some of the things that's been happening since then as USDA, CDC, and FDA continue to test and ensure, I think more and continue to ensure consumers that food and dairy products and meat are safe.
It's been interesting to watch all of this unfold. It seems like consumers thus far have not been too concerned about what's been happening and the testing that's been going on. For me, it takes something new or some new information to I think really get consumers' attention on this front right now.
It's just been an interesting dynamic overall, and the testing that's continuing, and they've been pretty good about being informative and making sure folks know, and it has been interesting to watch, I think, from my perspective as a journalist.
So absolutely. I always say I think this all matters in terms of thus far it's been not doesn't seem to be on the top of the radar screen. A big explosion in potential cases or more states seeing issues. Maybe that changes things, but again, right now it seems like consumers haven't really grabbed a hold to be concerned about what they see at this point. Maybe that is truly USDA with the information that's out, helping consumers understand how safe our food supply is.
And it's good to see on both sides of things, especially on the demand side, and to see those things still holding.
Yes, it is. Let's not let consumer demand slip, given where we're at today.
Scott, it's always great to see you. We will chat again next Friday.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens in the markets twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.